Okay, so I'm recording this now. All right, guys. My name is Tyler Carter. I'm here with Ben Thornton. I'm with the Curtin team of Keller Williams Realty, actually the buyer's agents for the team. And Ben is one of our preferred lenders. We're in Roswell, and Ben is over real close to us here in Woodstock. So, Ben, you just want to, just give a quick introduction of yourself, what you do, and what you help out with.
Yeah, no, absolutely. Thank you so much, Tyler, for hosting this webinar today. So Ben Thornton, Capital Mortgage Solutions, senior loan originator, can pretty much help take you from point A to point Z for the home buying process. And we are, like Tyler said, in Woodstock, Georgia, and look forward to hopefully serving you guys soon.
Gotcha. All right, so today we're just going to go through basically everything you need to know to buy a home. We are going to go through it pretty quickly, but if there's any questions that you may have, of course, always feel free to reach out, and just keep in mind that some of these things, these are very broad terms that we're talking about here. And everything about real estate is, every transaction is very different, but yet, some things still ring true. And I think you'll find this relevant no matter what part of the process you're in. And I always, encourage my buyers to start, earlier than later. So, the fact that you're here, no matter what you're looking, or when you're looking to do something, I think you'll find the relevancy in it. We're going to talk a little bit about our market today, what we're seeing, and, kind of the effects that we've seen here in the last couple of months here. So let me go ahead and get started here. So just real quick, this is how we like to start things out because, we don't really know where everyone is in the process, but we like to kind of get into the fears and facts because depending on, like I said, where you're at, you may have different things kind of built up in your mind that you may be holding you back from buying a home. So we break it down into fears versus facts. The first one is, I can't afford to buy a home right now. The fact is you don't know what you can or cannot afford until you talk with Ben and, a lender and see, what you can actually do. And, that's something that is never can be done too early because, if you can't afford what you want to right now, talking with Ben on the front end so you know what your down payment options are and how you get to that point quicker than possible. Let's say there's, credit repair that needs to go on, Ben can help you, paying off things in a certain order, or if you were kind of like I was when I started out, I didn't have bad credit, just didn't have any credit. And, Ben gave me a lot of advice of, how to most efficiently build quick credit. And so, the biggest thing is just, start, if you don't already know, is just, it's never too early to at least look at everything so you can prepare your mindset and, whether that's, starting to save a down payment or, like I said, working on credit or what have you. Another fear is, I should wait until the market gets better. And the thing is there's, I know it, may sound a little cheesy for us realtors to say this, but, there's truly never a bad time to buy the right home. What we mean by that is, even people who bought at the tip top of the market before the, 2008 crash, people view that as a bad time. But if they're the people who are still in those homes, once they got through it, that value has fully come back. And then with everything else, I mean, even if, you have to make concessions on, as far as not getting into your dream home immediately, which is another fear that we'll get to down the road. But that's how you get there is by, just building that equity. Anything's basically better than renting. And so even if the market is, I'm not sure everybody's impression, but, we definitely, the prices are, pretty high right now, but with the interest rates being, so low and, where they've been at historically, which we'll go into in a little bit. I mean, the savings there and the equity that you build, the tax benefits, all of that is just, totally outweighs, the market conditions. So another fear is, people aren't unsure their down payment. The thing is we have a lot of different, down payment options that Ben can talk you through. Of course, it always benefits you to put more money down. But I remember when I was going through this process, I had kind of saved up this nest egg that I was going to use for a down payment. And then, Ben, kind of said, hey, look, here's some other things you can do to not, you don't have to fully put down all that money. And so even if you, are curious about what that number may look like, he can work through that with you. And the biggest thing is telling you what your monthly payment's going to be, at the different price ranges, what 250 versus 300 looks like a month, and then with you putting different amount of money down, how that affects your payment. And, that way you're able to come to a pretty easy decision because, you can kind of weigh all the factors, and that's, you'll probably want to look at that from house to house, depending on, maybe how much the work needs or what have you. And then the last one here is, can't afford to buy my dream home. How you get into your dream home is, keep flipping that equity and move up, unless you hit the lottery or, become famous. Most people's first home isn't their, $1 million dream home. People look at, older people in big homes and like, oh, I couldn't imagine the mortgage payment on that. But what they are doing is they're, kind of what we call house hacking their way into that, where they're flipping their equity, to, go up. Or now, people are downsizing, and taking location over, pure size of home. Doesn't necessarily always mean that they get cheaper, when you're looking for a prime location, but, that's how you get into your dream home is, getting into something right now, not renting, and flipping that equity, improving it. Hopefully you'll have some appreciation going forward. And, that's how you get there. So a couple things we'll go into, it's like, why to buy now. This is a slide that we have updated this presentation, but, we've kind of left that mortgage interest rate in there because I do like to talk about that. When this slide was originally made, I believe it was a little over a year and a half ago. Mortgage rates were at 4.6%. Ben, can you speak to what they currently are now, around about?
Yeah. So I 100% agree. This probably was about a year and a half, maybe 2 years ago. I do remember rates being around 4.625. Right now, we're really in such a weird time with the coronavirus going on and all that fun stuff, right? So that being said, what I would tell you is that we have rates right now that really range anywhere from the mid threes up into, a little above 4%, just really depending on your whole criteria. But as a whole, like Tyler mentioned, really no better time now than to buy a home with the rates being where they are currently, which are fantastic.
Yeah, and we'll get into more of how, this coronavirus has affected it and what we're seeing, how that's affected the actual market. And, kind of more into the day-to-day, if you are looking to buy a home here soon, why you should or why you should not, kind of how everything's being affected. But, of course, as we look, a lot more broader picture, why you should buy now, it goes back to that, number 2 here, your long-term investment grows. That's that equity that I talked about. And then, the pride of home ownership, like I said, those tax benefits, you can customize it as you would like. You truly are building wealth whenever you own a home. And then, not having to worry about your, rent going up. If you rented for a while, that, once that lease comes due 60 days before that, they're, going to increase that rent just enough to make it a hard decision whether you want to move all your stuff again, or do you want to stay there. And, I think the biggest thing that, that kills a lot of people about renting is the constant moving. So just that stability and security, I think, definitely helps people out a lot. This is just a real quick slide. We just like to show everybody, like, how much of your actual mortgage payment is going towards the principal and interest, and how much is going towards literally everything else that is made up in a mortgage payment. Historically, it's been around the 21.6 amount. So, a huge portion of everything you're paying was going towards just the interest of everything. And now, that's so much lower at, 5.2. So really, with the interest rates being lower, a lot bigger portion of everything you're paying is going towards the actual, equity of your home, and not just for kind of the cost of the loan. Just real quick, we kind of went through this, but, kind of owning versus renting. My quick analogy is that, renting is like taking money out of your left pocket and just giving it away, where buying is actually taking money out of your left pocket and putting it in your right. That money kind of, it remains yours. Now, it's not super liquid, although, there are things out there where people, do pull out their equity in their home for things, but we don't always suggest that. But the very fact that you can do that is just a testament to that, that money remains yours. It's, just because it moved to your right pocket, you may not be able to pull it out and spend it, but, it's not throwing it away like renting is. And, you also have the chance to, get appreciation as well, as your home values grow. If you get in something at a cheaper price that needs updating, and now, you made some updates to it, if you look to sell, you'd be able to, sell for higher, which that money will, remain yours as well. Or, let's say you buy in an area that, is kind of on the up and come up. I know, just about every area we service have seen a good amount of appreciation. Downtown Roswell, downtown Woodstock, a lot of stuff inside the perimeter, as well. A lot of the hot neighborhoods down in like East Atlanta, now, West Midtown's kind of the new shiny object. So there's a lot of places where you can, even with the high prices, can bet on a good amount of future appreciation. But, we want to be honest with everybody, because, like I said, I always think it's a good time to buy, but, there are a couple of times to where you should hold off on buying, because we just want to be honest with you. If you're changing jobs, we got to have that income for, to prove for the mortgage. So, if you're going to be changing jobs, whether that's location or just, unsure of, what you're going to make, or if you're, going from maybe a W-2 employee to, a 1099, that difference may make, a good bit of change for you. Or, if your finances aren't quite where they need to be, granted, do check with Ben and run through everything, because you don't really know what that is until, you walk through that with Ben, and then he can also help you out with, how you get there. So like, if, like I said, with the credit score and the down payment, the different options there, and, what you can do to get to your ideal place right now. Or, if it's just too expensive for you, like, let's say you're, keeping your housing costs pretty low in like a little 1-bedroom, 1-bath rental apartment, or, you have roommates, and that's to decrease the cost. And then you look at getting a house by yourself, and, we never want anybody to be house poor. Everyone, we want everybody to love their house, but we don't want them to, be so poor and be so stretched for their money that they never get to leave it. A lot of people, don't want to change your life. We don't want to, not go on a vacation because, you have to give all your money towards your mortgage payment. That's not fun for anybody. Or then if you, the biggest thing here, short-term ownership. If you're, only going to live there for, 2 years, if you're moving out for whatever, you just know that, you couldn't live at that current spot for 2 years. You're not going to have enough equity nor appreciation to really see the benefit after your cost of sale. So if you're only going to be in there for 2-3 years, you probably should, continue on the rent side. But if, if you think you can be there longer than 2 or 3 years, then absolutely, buying is definitely the way to go. So let me move the box here. So as far as prices go, we don't have like an actual price here because, depending on, where, who's listening to this and where you're currently at, the average sales price in, let's say, Cumming couldn't be more different than Roswell, couldn't be more different than Buckhead. And we service a large area, so, we don't want to narrow that down too much. But, talk with us about that, where you're looking to buy. And, we can definitely get you, for what you're looking for type of numbers. If you're looking for a 2-bedroom, 2-bath condo in Buckhead, our average sales price of a single family home in Roswell is not going to be too relevant for you. So buyer's market versus seller's market, we're definitely still, in a seller's market. It does change with the different price ranges. So I think the biggest thing here is that, like with the average home price, let me know what you're looking for. And then let's talk a little bit more about that, because not every price point is the exact same there. And, because as inventory changes at the different price points, and, a lot of other factors, determines whether that's, a buyer's market or a seller's market, which is going to affect, how you're putting in offers and stuff like that. Interest rates are low right now. Like we went into, they've been, we'll get into a little more, about how they've, fluctuated in the last, year and a half or so. And then, none of us have a crystal ball, but, kind of what we can expect as well. And then, also super here, hyper local in Atlanta, our population increase has been pretty crazy over the last couple of years, and our inventory has not went up. So we still have, with all the growth that we've seen here in the area, we've definitely seen it affect the housing market. New construction's basically, kind of only available in the suburban areas, or, if it is available, kind of in the city, it's definitely at a high premium, which makes it not a fit for everybody. So, but, with the short of inventory, it's, you're kind of know that you're buying into a pretty stable market, just with everything that we've seen here with, big businesses moving here, and just, all the growth we've seen. And that's not just in Atlanta, even the outskirts, the cities, the suburban areas, what's going on in downtown Roswell, how big Alpharetta's expanded with Avalon and now Halcyon, Woodstock, of course, has, been going pretty crazy. Still, some lot of cool things happening downtown there. And that's just a couple of cities, especially stuff in the perimeter is always doing stuff. And, like I said earlier, kind of West Midtown, really all over the city. Okay. So this is just the real quick, steps to home, the home purchase part of it. The first step is, hiring your agent. Then we go through and, which, I'll connect you with Ben, and, that's how we get the, secure the financing. And then, we'll talk about how we, actually find your home, what that looks like these days. Then we get to the offer part. Then we go through inspections, and then, we go to closing. So, as we, get into that here, like I said, I'm a buyer's agent, so I mainly focus on the buy side of things. We have both agents on the list side and sell side, although those agents can do both. But, I really specialize in the buy side, which means I got I'm writing a lot of, purchase contracts and seeing a lot of those and being in a lot of homes. So, definitely more concise there. But, my job is to, get you to the process with the fewest amount of hassles, keep as much money in your pocket as possible. Solve any problems, be very solution oriented. And, here, with me being on the Curtain team, have a lot of tools, on my tool belt of, different people that we have on the team to help out, transaction coordinator, a home stylist, a director of first impressions. So many things that, really help out throughout the process. So it's not just me either. The Curtain team, we've been doing this for a long time and do a lot amount of transactions, which just means that we just get more experience. And, we've still get surprised every once in a while on new stuff we see, but, odds are one of us has incurred these little things before. So, the buyer's representation agreement, that's really, when you're interviewing agents, a lot of people don't interview agents on the buy side, but I definitely recommend people doing that, just to make sure, you are being, represented on your, what's probably going to be your biggest investment by somebody who's a true professional, not, somebody who just, mom's brother, sister happens to know. A lot of times you don't realize, I'm sure there are, nice enough people. A lot of times you don't realize you need that, in-depth representation until it's a little too late. So, always, definitely, interview, agents. That buyer's representation, sets a mutual expectation between the two parties, everything from how it's paid. So personally, my commission is paid for by the seller. So my buyers never have to pay me anything. And that's, set forward in that agreement. Let's say the, seller's not willing to pay the full commission. That checkbox that I check on the contract says that, you're not having to make that up. So, gives you confidence moving forward, is what your costs are going to be. This is just a real quick, how when you should actually start to hire your agent. And this is something that, you can definitely work through whenever you, meet with an agent, but basically this is a lot better done on a personal level. So we won't get into all the dates, but basically just know that, when you sit down with your agent, when your lease end date may be and when you should, start working with me should, basically it's never too early to start talking to a lender or a realtor, whether you're a couple years out and trying to figure stuff out or, whether you're ready to start the process now. We can go through this very personally as far as when maybe your lease ends or when you're looking to move here and, kind of what that process looks like. So step 2 is, once you get connected to the agent is, securing your financing. So, Ben, just, feel free to, go through this real quick and just, kind of a little bit about what the pre-approval process looks like.
Sure. Thank you, Tyler. So, there's quite a bit of a difference between a pre-approval and a pre-qualification. I have a lot of clients call me every day and they're like, hey, Ben, I want to go through the pre-qualification process. And then I explain to the client what the difference between the two are. And they quickly say, okay, well, yeah, I need to do a pre-approval. The main reason for this is because when you get ready to submit an offer, like Tyler, for instance, submits an offer for you, you're going to find that a pre-qualification doesn't mean anything, basically. It's just a piece of paper that says that I spoke to client A, and client A told me he had a 700 credit score. Client A told me he made X income. And versus the pre-approval is I have actually confirmed with a credit report, I've confirmed your income with a pay stub, and I've confirmed your down payment with a bank statement, which basically makes your offer a lot stronger when you get ready to submit that offer on hopefully your home that you're looking to go ahead and get. So it's extremely important that we do a full pre-approval. The main things: pay stub, bank statement, and a credit report. Those are the 3 things that we're going to do to get the pre-approval. And that process, typically speaking, is a very quick process. A lot of people think that takes days to do. And the reality of it is a lot of times we can knock this out in 30 minutes or less. Mm-hmm. So most certainly.
Oh, I know that guy.
Yep.
All right, get the next slide here. Oh, let me move the box here. Okay. So Ben, just talk real quick about a budget and how you can help out with that. I went into it a little bit as far as how you can help at the different price points, and different down payment options.
Sure.
really
But
help.
from the budget side of things is pretty straightforward, right? The reality of it is, of course, we're not a financial advisor, but what we like to do is take a peek at the credit report, and the credit report is going to tell me what your monthly debt obligations are. And a lot of clients get concerned. They may say, "Hey, I have $10,000 on a credit card," and first and foremost, that doesn't really matter. We don't care what your balance is. What we care about is your monthly payment. So you may be $100 or $150 monthly payment with a $10,000 balance. What we're going to do is we're going to create, there again, I wouldn't call it quite a budget, but what we're going to do is we're going to create your monthly outlay of how much your minimum monthly payments are. And then we're going to take that number, we're going to divide it by your actual income. And that's going to determine what your debt to income ratio is, which is ultimately going to allow us to figure out what you qualify for. So from a budgeting side of things, we're going to work from that number to determine what we feel like would be a comfortable number for you for a mortgage payment. Just like Tyler mentioned earlier, the last thing we ever want you to do is, the way I refer to it, as house rich and cash poor, right? We're going to do everything we can to make sure that your monthly mortgage payment is in line with what you truly feel comfortable with moving forward, because a lot of times this is a 30-year payment. We're going to be paying this for 30 years. So we want to make sure it's something that you're comfortable with. Kind of going into the side that we're in here, down payment, multiple different down payment options. I hesitate to kind of get into a lot of them because things are rapidly changing right now in the little odd environment that we're in currently. But we do have options right now as low as 3% down on a conventional product. And in your government products, your FHA, we have 3.5% down. And then of course, if you are a veteran, we have options as low as obviously 0% down. So all that to be said, it speaks of interest rates at what rate, right? Well, we're going to have to determine the market rate that you qualify for at the time we speak. But as mentioned earlier, rates are incredible right now, historically speaking. So certainly there, again, no better time than now in that regards. And last but not least is your term. What type of terms do you have? I mean, we have options. I mean, we really have a flexible option. You can literally do a mortgage anywhere from a 15-year all the way up to a 30-year in regards to, we can actually do a 16-year or 17-year. So we have different options because a lot of times clients aren't really wanting to do something for 30 years, but they feel better about doing a 24-year mortgage. So we certainly can accommodate that. And I mentioned 15-year, we do have 10 years as well. But right now, one more important fact to mention, a lot of times clients are saying, well, they've heard about ARMs in the past, a 5-year ARM or a 7-year ARM or a 10-year ARM. And we're not in our market. Fortunately, we're in a fixed market.
And what does ARM mean, Ben?
Yeah, ARM basically means an adjustable rate mortgage. So basically it means, let's just say a 5-year ARM. That would basically mean that for the first 5 years, your rate's going to be fixed. And after that is when you're going to be subject to whatever the market conditions are, and your interest rate can adjust accordingly once a year from that point forward. Mm-hmm. So with the uniqueness in the market right now, I think it's important to speak about this because we most certainly can see that actually change. I apologize, my light was going off. So we could slowly turn into an adjustable rate mortgage market. We are currently in a fixed market. Basically means our 30-year fixed rates are lower than even a 5-year ARM. Historically speaking, your ARM rates have always been lower than your fixed market. But right now we're still there, but it's certainly something we can explore as the markets do change.
Gotcha. Okay, thank you.
So yeah, great.
Yeah, you hit most of that.
Yeah, no. Well, I'll quickly talk about it real quick. So basically your mortgage payment is made up of ultimately 4 things here: your principal and interest, and your taxes and insurance. So your principal and interest is something that I always speak of that we can control from your monthly, or not your monthly, but your a balance that you're actually borrowing, right? The taxes and insurance are all going to depend on, the county that you're in, or the homeowner's insurance company that you find. Now, we do have people we can certainly turn you on to as far as an insurance company. I'm sure Tyler does as well. So we'll make sure we help you get the right insurance carrier to take care of that portion. But the taxes and insurance are portions that are typically included in the mortgage payment. But one more important thing to note here, Tyler, that is more of a recent change. It used to be where you would have to put 20% down in order not to include what we call your escrow, your taxes and insurance within your mortgage payment. Now we've actually recently changed that in the past year or so that will allow you to pay your taxes and insurance completely separate as long as you put 5% down, which basically means your monthly payment is actually going to be significantly lower. But when your property taxes come due or your homeowner's insurance come due, that's going to be your responsibility to make sure those get paid. But it does allow you to be able to have a flexible monthly payment, if that makes sense.
Gotcha. Okay. Went into all the down payment stuff. Just, I can touch on this because I'm usually, talking about this with people a lot too, is, just know that, when you're in that pre-approval process is that you kind of got a microscope on you and your finances. So, any big purchases, we wouldn't recommend any of those. And just know that, a lot of that stuff can, kind of come up into question. So, don't want to, add new credit. Don't want to. Biggest common mistake is, people, I'm going to buy a house. Let me go and, open up a new credit card. And because I save all this money when I go to buy furniture for it, so just know that, you have a microscope on you during that time. And just always double check. Yeah. Always double check with Ben if you think it's something that, could be on the fence. If you think this is a good time to buy a car, check with, or any big purchases or any, even if you're on the line about something, just check with Ben real quick before, do anything there. Cause, we've definitely seen some pretty smart people not fully think that out. And people that weren't necessarily, hurting for money, but, little things, can kind of make a big difference when you're in this mortgage process. So step 3 is finding your home. That's done basically the best way is, off of a needs and wants analysis that, once you, hire your agent, they'll go through with you and, teach you about your specific market, when, kind of what your expectations are, whether you can expect to be in a lot of multiple offers, whether, depending on the price point, whether it's a seller or buyer's market. Set you up on a true FMLS search to get you off of Zillow and sites like that can be inaccurate or not have all the info or not be able to fully filter out everything that you may be looking for. And then from there, it's actually going and viewing the home. So with this, talk more, very sensitive to right now is, a lot of virtual showings going on. With everything that's going on, FaceTiming in, virtual open houses. But looking at homes is still not, totally impossible and something that hasn't changed too much. Sellers are always out of the home whenever you view the home anyway, so that contact's been limited. A lot of sellers are leaving out, Clorox wipes on the front porch. I actually travel with I got a little thing of hand sanitizer here with a clip on it. I'm literally clipping it to my belt and hand sanitizing down before and after I go into homes. A lot of homeowners are leaving the lights on and leaving doors open. So, on the inside, so just, the buyer can go in with, kind of their arms tied up and don't have to really touch anything. So other than that, everything's been, as far as the actual showings of the home, been pretty easy. But, it kind of comes down to everybody's, there's definitely some sellers out there who are older, who, are definitely at more risk and, they just haven't been able to, everyone's kind of look at it, as at their own viewpoint, and depending on your, of course, everybody can be exposed to it from what we know, but, depending on your risk factor, you may not, elderly people may not even want to have anybody in their homes, so it really just, disclosures to where, buyers typically look for, more things like, location, work in schools, more what fits the house to your eye and your needs, which you can do. I'll teach you, how to be an educated buyer. My thing is I like to, educate my buyer so that they are, fully aware of everything. And then that makes their decision process so much easier. And I'm just here to, kind of look at the other big things, kind of, and do all the behind the scenes stuff. So, this is just, whether you're doing a condo or townhome, the pros of that, lower cost per square foot, your yard maintenance isn't going to be as much. A lot of those do have amenities, pools, tennis, playground, stuff like that. The cons are, you do have shared ownership, you are going to be closer to more people. They are managed by a board of directors. So that means there can be rules around different things, everything from, how many vehicles you have in the driveway, what color you can paint your house. Sometimes there's protected breeds in the pet clauses of them. So, definitely got, pros and cons, and you just got to kind of evaluate, really each condo and townhome by themselves because they are so different. New construction, like I said, we don't have a ton of that here in Atlanta, but definitely an option for some people depending on where, where you're looking to live, and, kind of, what some people just want that new home, and may want to do that, more custom type build. The pros of those, it is new, the age of everything. So the home's going to come with, there's a lot of warranties that transfer with new homes now on the systems and structural part of it. So, you're buying a new product. There's always a degree of customization to it. As far as the prices go, you can, there's different things you can do there. You have a base price, and then, you can add on stuff to that. And then, every once in a while you are able to find some good new construction deals, whether, let's say it's the last house in the neighborhood. Maybe it was a model home. Maybe they just are ready to close out the neighborhood. So they're ready to really get a lot off of the sheet. There are potential ways to, kind of get a deal there. So move the box here, the cons, you may not fully know the neighborhood you're going into, and, whether you're going to like that feel or not. Closing dates can be, very fluctuating as far as, how much building you're doing, as rain will affect stuff, the time of year. So, you don't always know. And, some new construction communities don't have their amenities built until after the full neighborhood is done. So you may move into a neighborhood that very much will have amenities, but won't be done until maybe 3 or 4 years after you moved in. So, but that's also something that's totally different from neighborhood to neighborhood. Once you find the home and, we've done all our research as far as, getting the disclosures and all that good stuff. And, you've checked out your commute times, and, it looks like the one that you want to make an offer on, we make the offer. And that looks, a lot of different ways. Price is definitely the first thing that people think about. But there's other things that are in a contract that are more important. I'm going to say more important than price, but definitely important as well. Not only our offer price, but, how much closing costs you're going to be asking for from the seller. Other terms, such as, financing contingencies, things of that nature, closing dates, whether, when you wanted to actually take possession of the home versus closing date, and then any other little idiosyncrasies that may pop up. Let's say we walk through the home and we, go ahead and see that the door is, not closing properly. That may be something we want to, go ahead and write in on the front side. So literally you can get really creative with offers, and write in just about anything. So, definitely something to keep in mind. It's not, an offer isn't always just sales price. Then, one of the things that's a part of that, the terms of those contracts is your due diligence period. In Georgia, during the due diligence period, you can pull out of the contract for literally any reason and get your earnest money refunded back to you. But during that time is, when we get our inspections and negotiate for repairs. A lot of that stuff it's for the big stuff, not the small stuff. So, cracks or crumbling in the foundation, cracks inside or outside the walls, HVACs, mold or termite issues, those big things. It's not, little GFCI outlets or, different paint colors or cleaning carpet. It's really for the big stuff. Let me go back here. So, and, how we can do that is, we can either ask the seller to fix those items. We could ask for, try to come to agreement with the seller on, a closing cost contribution or a price reduction. And that really is going to depend on the problem and, something I want to get too specific in because it is so, from house to house, from situation to situation, what's possible. So, and then after that, we go to closing. Once we go to closing, just, be ready to sign a lot of documents. But at that point, everything's been done. We do have, table closings here in Georgia. So that means, buyer and seller meet at the table. But right now, that's still going on. But it's basically, I'm not even allowed to come to closings. Me and Ben usually attend all of our closings. And we haven't been allowed to here lately, which is fine, just to keep with the safety with everything. And we've had, buyers and sellers in different rooms, but, we're still, still closing homes. And, I'm not to say it's business as usual because it is so much different, but everything, real estate's been deemed an essential business. So it's, everything's been, as far as closings go with our closing attorneys, like I said, I don't want to say business as usual, but still ticking right along. We can get everything done that we need to get done. Yep, already hit all that. Closings where you do get your keys, and you'll have, your clear title and your settlement statement, and then, your deed and all that will come in the mail. But, like I said, once we get to closings, everything's pretty easy. Once you do move into your home, there's a lot of things that you need to do to, protect your investment, keeping it clean, keeping an eye on it, keeping a file of your receipts and repairs. And, if you did look to make any improvements, that's something that, the Curtin team can definitely help you out with as well. We can really help with anything that has to do with homes, whether, let's say, you move in and want to do renovations down the road. We can, definitely help with that. We're recommending contractors, or let's say, Lord knows something, does go wrong with your home, home ownership, there is, always costs there, but, through our preferred vendors, we definitely want to get you somebody trusting there. Let's say, you need a HVAC service, we definitely got somebody for that, really somebody for everything. So if you ever need help with any of that, just let us know. And, feel free to, reach out to any of us to get started. My email's there, Tyler@curtainteam.com. And that's my cell phone number, 678-654-2181. And like I said, no matter where you're at in the process, feel free to reach out to us, sooner than later, just so that, you have the most amount of info possible to really make your mind up about, what this looks, what a home for you looks like. So Ben, at this point, let's see here. Let me get off this here. So basically, Ben, just, give us anything that, people should be aware of, and I'll talk a little bit more about it as well. What you kind of see going on in this market right now with all the coronavirus stuff, and, and maybe, even your contact with the realtors and your buyers, like, what are you seeing out there? And as people, whether they are looking to move right now or a couple of months from now, how you can see it affecting everything.
Yeah, no, thank you, Tyler. So I would just say in general right now, we're really starting to see a lot of changes in the market, a lot of fear from the servicers that are currently servicing mortgages right now. So that being said, we're starting to see lending at the current moment tightening up a little bit. Now, that doesn't mean that you can't buy a home. I mean, we're coming off of a March one of the biggest months we've ever had as a company. And in April, I feel like will be a very similar setup. So what that tells me is people are still buying, people are still refinancing, lots of different things that are going on in the market right now that are still happening. What we're really noticing most is just, I could quote a rate to you right this moment, and then an hour later, it could be better or worse. So what I'm really liking to do right now, apologize. What I'm really liking to do right now is, let's just say that I think you qualify for a 3.5%. Well, when I am pre-approving you, I would rather put a number on there of like say 4% instead of 3.5. And the reason that is because if the market was to shift, the last thing I want you to do is, tell you qualify based off a certain rate. And then, it moved up to 4% and something's different, right?
Mhm.
We're starting to see turn times from the time that we submit your loan into underwriting start to get a little bit more extended. But there again, we're still seeing, files closing in about 30 days on average. So, it's a little bit of differences with the rates going up a little bit and the turn times getting extended. A lot of the criteria of what you qualify for on a certain loan program might be a little bit different now than where it was, say, a month ago. But we all do believe this is very short term. So where I would lead my clients right this moment is, regardless if you're uncertain about, do I buy now or do I buy a month from now or 3 months from now, is go ahead and let's get this pre-approval process done, because our pre-approvals are going to be good for 90 days. And I feel very confident myself anyways, that we'll be a lot closer to the end of this within the 90 days with the corona being going on. So that being said, I would strongly advise go ahead and going through the motions of the pre-approval and just being prepared, because like Tyler said, you just don't know when that right home is going to hit the market. You want to be prepared for it. Rather it's at 3.5% or 4% of the rate, really doesn't matter, because what you're looking for is the home that fits your needs, and they're quick. They hit the market and they're gone. So be prepared and start the process now.
Yeah. And just to kind of, relay some of the things I've seen, if you, a lot of the people who I've been, who I've talked to, a lot of, what are going to be future clients here who told me in, November and December that, hey, we're looking to, purchase in the springtime. Of course, November and December, we didn't know about any of this, or, if they told me last year they're looking this spring. A lot of those people have kind of pulled back, and, whether those reasons are justified or not, whether it's a job situation, or, maybe they have a, higher risk or whatever, and I totally understand that. And, if, of course, I'm not going to say, hey, absolutely, there's no reason to be concerned about this. Just keep going about life as normal, because I mean, everyone's life has been pretty dramatically affected. I don't really care what you're doing. I think that's the one thing about this, is that this is, dramatically affected everyone. Even if you still, let's say you've always worked from home, or, let's say you used to go into the office and you still have your job and everything's, business as usual, but, working from home and, just having to stay in and everything that's affected there. I mean, I totally understand if people are wanting to hold off, but if it's still a goal of yours, and you're still looking to, to do something, I also see a little bit of opportunity here, because I think with all those buyers, kind of retracting, and there, to give you the pros and cons, there also have been some sellers retracting as well. There's been some, so maybe not, quite the inventory that we would see regularly this spring, with all this going on, but, I am still seeing multiple offers out there. And like I said, if getting a home is still your goal, and I think the opportunity here is that, with all those buyers that, were maybe less motivated, pulling back, depending on the price point, just to totally preface it, and location, you may be in less competition with other buyers. and there's things that we can do with virtual showings and things of that nature to really ensure everybody's safety throughout the process. If you're still looking to do something, because I like I said, I mean I'm still out showing properties. We are taking all the safety precautions and keeping 6 foot away, and only essential people are coming. So maybe not the whole family's coming to the showing, or I've went in the home by myself and FaceTime clients in at least enough for them to feel comfortable with making an offer. Had a client a couple weeks ago, was actually he lives in Florida, was moving up here, and I FaceTimed the home enough for him to be comfortable enough to drive up here and see it himself. Everyone wants to minimize travel these days. So, and with our due diligence period, that way, he was able to, really go ahead and make an offer, make sure that this home was a play for him, get it at the price he wanted, and then see, when it's come up here, if it really does check out. I think that, really makes everything easier.
Tyler, one thing I want to add is right now what I think we're going to see is our spring. First off, let's go back to where the economy was prior to Corona, which is the best it's ever been, right?
Yeah.
So prior to Corona, we're dealing with multiple offers almost on every home, right? We're going to see, we still have, like you said, a ton of buyers out there that want to buy homes that are just right now limited. So when we get into June, July, August, or whatever those months are when this really passes by. Oh, you still there?
Yep.
Oh, my screen went away. Can you see me?
Yeah.
That is strange. Well, I'll continue on even though I can't see you guys.
See
Okay. So that being said, I think more now than ever, especially we're all at home right now, let's go ahead and take care of that pre-approval process now, because when we get into those markets, we're going to have all the people that were ready to buy that maybe didn't buy due to maybe a job situation, being furloughed, whatever that situation is. But so you're going to have all those buyers. Then you're also going to have the buyers that were already ready to buy in that, whatever that market was, that June, July, August market. So we're going to be dealing with double the buyers. So as Tyler said, if you want to go ahead and if you're able to buy now, go ahead and buy now, because you're going to be dealing with an extreme amount of people all kind of piling in at the same time to buy a home. So do it now.
We're all kind of looking, and which I hope, a boom does happen, after we get through with all this. And I don't think, and no expert here, but, I don't think it's going to be a clean, a clean break. I don't think it's going to be, whether that is, June 1st or July 1st or August 1st or, whenever, I don't think it's going to be all right on this day, we all are going back to normal. I think, things will, it's going to be like at first a slow back to everything. But then I think when everybody realizes, everybody's safe and things are getting back to normal, that, there is going to be a huge boom there. And granted, we would love that, even for just the economy, for people who, have definitely, lost some things during this time here. We want them to be able to make up for that. And I think everybody being cooped up in their homes for so long and in quarantine and not being able to travel, not being able to just go and, go to a Mexican restaurant or not be able to go to a concert or not be able to, everything that we're, so locked in to do, I think people are really going to be ready to take advantage of it. In same way with the home buying process. Whether, there's some people who are still looking to do stuff or people who were maybe less motivated who have kind of used this as a reason to, kind of hold back, whether they're, cautious of it or not. I think that's going to be when everything like really comes back. So Ben, I'm definitely in agreement with you there. I think you're right. That, this market we could be looking to go into, and I don't see a crazy amount of inventory coming back because sellers who have to sell are still selling right now. As we see in the market, I'm still encountering multiple offers, but without an increased inventory, and more buyers on the market whenever this thing does end. If there's a boom, and like I said, we have no crystal ball. We don't know for sure what's going to happen, but you know, I can definitely see that happen because the way that the economy was before this whole thing started. You know, this is not this is not 2008. This is not an economic. I mean, it's become an economical problem, but you know, that was not the source of everything. So, you know, we hope we come through this and you know, get back to normal sooner than later. I know I'm definitely ready. Amen. So, is there anything else that that you want to throw in here, Ben?
No, I would just say that if you are seeing this message, I mean, feel free to give me a call. Tyler can share my contact information with you at any point. Yeah, let's be ready. Let's be proactive and not reactive for when your time is ready. And we're here for you. And thank you very much, Tyler, for hosting this, and look forward to hopefully speaking to some of you guys soon.
Absolutely. So yeah, guys, y'all reach out if y'all have anything you know, that we can be helping you out with, anything you're curious about, you know, anything, you know, about the market. You know, we would love to talk with you, because you know, we're not we definitely got still business going on, but we're not so busy that we can't take that. You know, business is definitely for us slowed down, or at least from my end has slowed down. I'm sure, you know, Ben's still probably staying pretty busy with, you know, refinances and such, but you know, we'd love to talk with you. You know, if there's anything that we could be helping out with, and don't feel like you got to be totally ready to buy right now, if you just at least want to have that conversation. So, all right, guys, thanks for joining us. Ben, thank you again.
Thank you, Tyler.
See you guys.